Hey everyone, and welcome back to the channel. So today I'm going to be taking you, of course, through my M1 Finance portfolio, as well as actually purchasing a new stock. Now, if you saw it in like the thumbnail or the title, I'm going to share with you a company that has over 1000% return on your money if you invested it 10 years ago. Now, this is going to be the same company that I'm going to be adding here today. Super excited to show you guys because that's pretty crazy. So if you invested like $10,000 10 years ago, you would actually have over $110,000. It's pretty bazonkers. So we're gonna get into that. But of course, what we're gonna do first and foremost is actually show you our M1 Finance portfolio. So what we're gonna do here is actually show you where we're at and what we plan on doing. And if by any chance while we're going through this, if this is your first video with us, my name is Dennis and we love talking about personal finance and becoming financially independent. So make sure you follow along here on this journey by hitting the subscribe button. You can tap on that bell if you want to get notified when these videos do come out. Now, as I mentioned, we're going to take a look at the portfolio first. Not much has changed since the last video if you watched last week. Our total value is sitting at $247.29. Now, of course, that's not a lot. This is really just fun money. I have my retirement that's going as well. So we're just always learning and growing here on the channel with these videos in this series. So our total gain right now has been over $17.98, and then a total return of $12.62. And that's a lifetime since we've actually been investing. It hasn't been a year yet. So this quarter right now, our total return has been 4%. In the last month, it's been 3.55. In the last week, it's been 0.39. And then in the last day, as of recording this, it was down 0.46. So not too bad overall. I'm super happy with where the portfolio is today. And then just a kind of like a quick recap here for you guys. We have the Vanguard S&P. I'm probably planning on taking that to about 50% of the portfolio and then just hopefully kind of leaving it at that. We have our real estate, we have consumer, and we have tech sectors right now. So real estate, we have NRZ, which is really just kind of, having fun with that. And then ticker O here, we have that for our monthly dividends. And then if we go back here, we have our consumer. So for consumer, we have Disney, Home Depot, and Tesla. All are in the green right now, which is always a really nice thing, especially because Tesla has been kind of up and down recently. And then for our tech right now, we have AT&T, and we also have Microsoft. So everything has been going pretty well so far. Last week we got paid out a dividend, and then I added some extra money, so we had that all going in. And then as of right now, for all of our holdings, because M1 Finance does the fractional sharing, we have just the half a share of Vanguard. The only one that we actually have the full share of is NRZ, because of course it's a very small amount as far as owning a share. Everything else is still in the 0.0 or 0.43, it looks like right over here. So we'll eventually get to the point, because I do plan on bumping up the amount that we put in every single week. Hopefully sooner than later we can start jumping up to $20 a week, 30, 40. We do this over time because it helps manage our budgets properly, because for now with doing the $10 every week, it's made it very easy to budget for. And then once we add an additional $10, we'll have to readjust our other categories in our budget to be able to accommodate for it. So that's one great thing to do when it comes to getting started with investing, is just start small and kind of go up from there. Oh, and one really quick reminder as well, if you're still watching this during the time for the promotion, they do have a referral bonus. If you want to use my link for M1 Finance down below, you actually get a $20 bonus for using that link. Now, let's go ahead and look at this other company that I want to add to this portfolio. It is going to go into our consumer category here, so we're going to be adding it in there. So the company that we're going to be going with here today actually wasn't one that I've been looking at for a long time. Usually what happens is when I'm adding a new company into this whole portfolio, I've been looking at them for a couple of weeks and then make the decision. I actually had a couple people reference 3M over the last couple of videos, which I have been looking at, and I am really interested in them as well. But I wanted to add this other stock currently into the portfolio because mainly with the type of return that they've gotten over the last 10 years, I don't know if it's gonna, be the same over the next 10 years, but based off of their history, it's looking pretty good. So we're gonna go ahead and actually add them here into the portfolio, and I'm gonna show you guys a little bit of the back history of this. Now, of course, before showing you guys this, keep in mind that I am not, a financial advisor. Do your own research when coming up with companies you want to add to your own portfolio and invest in. This is just a company that my wife and I personally use. We go to this store all the time, and we give them a decent amount of our money. So it's definitely a good idea to invest in something we know. Investing in companies is always a good idea if you feel like they're gonna be there for the long term, because you usually will pay attention to the news articles surrounding them. You're usually obviously in their shops, so you kind of see things in real time, versus investing in companies you might not actually know about or have physically seen. I know that's not always possible, because as most consumers, you're only gonna be buying consumer stocks, but that might be a great way to get started with investing, is investing in the things you know. So this company, as I mentioned, we go to all the time. So I'm gonna go to edit, and let's go ahead and add. And this is actually going to be Ross. So most of you guys might know Ross. The ticker number here is ROST. Right now, its dividend yield is at 1.01%. So it's actually fairly low in comparison to the other dividend yields I currently have. But what I really also like about this company is its growth pattern. And that's what I'm gonna show you guys today. So I go to this website. It's called stocksplithistory.com. I just always like to see how often companies split their stocks, because I just find it fascinating. So this website also shows you what you can have with your dividends reinvested over 10 years with $10,000. So right over here, I'm actually going to highlight this. So this right over here is going to show you that if you started off on July 8th, 2009, and then sold all your shares in July 5th of 2019, so exactly 10 years, well, obviously a couple days off, but pretty much 10 years, the starting price for one of these shares was $10.14. It's currently at $100.88, which means you started off with 986.19 shares, and you ended up with 1,092.71, and that's again because of your reinvesting the dividends. Your dividend returns per share is $4.52, but here's the kicker. Your total return, I think I'm kind of cutting it off there. Your total returns here is 1,002.33%. Like, that's crazy. So it shows right here, if you started off with $1,000, you would have ended in 10 years time with $110,203.37. That's crazy. I mean, there's obviously other companies that have done that kind of return as well. But for a company like Ross, just very normal company, sells normal products in their stores, to have gotten that much of a return over the last 10 years is unbelievably crazy to me. So I definitely love this store. I go to it quite often. It's actually where I get most of my clothes from, and my shoes, and a lot of our house decor as well. So I'm like, why not invest in something I do know, or at least shop at? I've done, a little bit, of course, the back end work of looking at their PE ratios and all these other aspects, and I do feel comfortable enough to want to invest with them. Obviously with the intent of, wanting to have growth, but also still earning a little bit of dividends. Because being at the age that I am at, just going for dividends themselves is not always the best option. Trying to get some growth in there is going to be key for us to be able to have more money when we do retire. So I'm definitely in the mindset of kind of wanting to add some other growth companies, and I feel like this might be a really good option for us. So we're gonna go back over to the M1 Finance portfolio, and then we're gonna go ahead and hit add to basket. We're gonna go ahead and add here. Now, of course, this is the consumer pie, so it's already split up a couple different ways. So I'm gonna just try to make this, of course, as even as possible for us with all these different companies. They're gonna pretty much be around 25% a piece. And then that way, that's gonna make them at 100%. So what that's gonna do, in case you might not be as familiar with this, when I add, I'm gonna go ahead and save this here really quick. So when I add Ross now, and it's gonna make it 25%, it's gonna make all my other categories here well above their targets now, because their original targets were 33%. So what that effectively is going to do is any money that comes into this portfolio, or this pie within a pie, all that money is essentially going to go into the Ross category until Ross is around 25%, and then it'll start splitting into these other companies. There's a couple different things I can do. If I wanted to, I can just buy right over here into this pie in particular. So all that $10 that we're gonna be adding this week goes directly to Ross. Or if we just go ahead and buy into the overall pie, what that's gonna do is a majority of that's gonna go into Ross, and then the rest might be split up with a few other companies, because when you do fractional shares, certain companies can be bought into those companies from, a couple of pennies, where some of them need a lot more than that to be able to buy even a portion of that company. All right, so with all of that, we're gonna go ahead and deposit $10 into our account. And then the next day, this will go into our overall fund. And then next week, I will show you guys the full breakdown of how this $10 goes into the account. So let me know in the comments down below, do you guys have Ross in your portfolio? And then also too, are you surprised by the return that Ross has actually gotten over the last 10 years? Honestly, I was completely surprised when I checked it out and did all of my extra research for this video. I'd like to hear from you guys in the comments down below. Now, if you want to see more content here on the channel, check out some of these videos right over here. And if you made it this far, don't forget to hit that subscribe button, and I'll see you guys in the next video.